Hi, this is Wayne Bilal, and welcome to another Smart Profit Maximizing Moment. It's Wednesday. It's hard to believe tomorrow's the end of February. Crazy as all heck. Again, my name is Wayne Bilal. I'm a local CPA, founder of the firm back in '91. So I've been doing this a long time, helping business owners, pay less taxes and make more money. And actually started when I was in college back in the mid '70s, and so passed the CPA exam and so, yeah, that's how long ago it was. '77. I have to look behind me. Anyways, I'm also the founder, the creator, of the Smart Profit Maximizing System. And the T stands for taxes. And we're in the middle of tax season right now. So I thought, why not? Let's talk. Usually I save this for later, and I'll probably repeat it later in the year, like in November, December. But the question is, how do I legally pay less taxes? Question I'm getting constantly. All right. Look, reducing your taxes is a component of maximizing your profit. All right. Think about it. You work hard, increase sales, cut your cost of goods sold, lower your labor cost, cut your overhead, you end up with profit, and if you're not smart, the IRS takes a third of it at least. Okay. So that's what the problem is. Now, unfortunately, most business owners do nothing about it. They turn their taxes over to me as a CPA and say, go do your magic. Here's the problem. During this time of year, this is compliance time. We're taking history. In other words, it's done. Last year's over. What happened, happened. I have a few things I can do. There's a big difference, especially if you're in business. There's a big difference between somebody like myself who's been doing it as long as I have. I know some tricks. I know how to move things around a little bit to most properly take advantage of the tax law. But there's a limit to what I can do. Because, there's not a heck of a lot we can do. Whether we do a Section 179 or fully depreciate it, put your kids, claim your kids not, put a SEP in place after the year end, make an IRA contribution. Nice, save some taxes, but they're all tinkering, all right? The truth is, my smartest business owners focus on finding larger legal methods of reducing their tax hit. As business owners pay a much smaller percentage than the average business owner. Here's the things they do. My smart business owners prioritize tax planning. All right? Why should you take tax planning seriously? Tax planning is one of the few things guaranteed to give you a return on your investment. Matter of fact, this last year we saved our clients over $1 million. Over the last 3 years, that's $4.3 million. They were a little below average because they cut the tax rates and gave me a lot of tools. And if you cut the rates, there's less taxes. But still, I had somebody, an average case pays me $3,000 to $4,000 and saves them $30,000 to $40,000. A larger case pays me $5,000, $6,000, $7,000, and my largest one saved $500,000. All right, legally. We don't play games with that. I love my clients, but I'm not sharing a jail cell with them. Okay. What's the problem? What separates the smart ones? Well, what I hear from the others is, I'm too busy. I have a CPA. I turn it over to them. It's their job. What did I tell you at the beginning? My job right now is compliance. Yeah, I'm going to look at it if I see some things that are tax planning. I'll schedule a call in May or June. But my main thing is putting the return together in a way that's legal, accurate, and and gets rid of as many red flags as possible. All right, so that I'm not making you an audit target. No, every single thing, why does tax planning work? It works because it gives you time to do the things in your business that you can't do after year ends. It's really just a matter of being proactive before the end of the year rather than reactive and just dropping your stuff off sometime the following year. Simple things. I had a client that could have made a decision to finish a job and bill it in December or finish the job and bill it in January. When we did the numbers, he said, yeah, I can easily wait a week or two, and finish it in December and send the bill. Simple things like that. They're on an accrual basis. On a cash basis, it's things like ordering material you're going to use in January. It's paying your rent on December 31st instead of January. It's having the office closed, depositing in January. I mean, you got to be careful with that. If you earned it and you got it, that's legal. But get rid of your CPA on that. Other things they do, smart business owners call their tax advisor before they make business decisions, before they make major financial decisions in particular. All right. Kind of annoying. Yesterday I had middle of tax season, had an appointment with an old friend who's making some decisions. I actually stuck her in because I really appreciate people who come see me before they make a decision. All right. It's very, very annoying to have a situation where they've done it and I could have helped them. All right. For example, they sell a piece of property, have a big gain, turn around and buy another property with the proceeds. I had to create, they don't understand if they had rental property and depreciated it, I have to recapture some of that and it increases what they owe. All right. Plus, if they'd come to me and said they were going to use the funds to buy another one, we could have set up a 1031 exchange that basically moves the gain, defers the gain down the road. They wouldn't have to even pay the tax. They didn't call me until after they were done. Worst situation, I had a client of mine, he's passed away now, so I shouldn't talk about him too badly, so I'll be polite. Nice guy, really was. One of my very, very first clients, and he would call me. This time he didn't. I'm doing his tax return, and he got $50,000, money out of his IRA, and he took it out like a month before his 59th and a half birthday. If you're not familiar with this, if you take money out of an IRA or a 401k before you turn 59 and a half, you're not only taxed on it, you got a 10% penalty. I called him and asked him why he didn't come. What happened? And he goes, I'm just going to take a trip, paid off some of the mortgage. And, I said, you're getting penalized on it. Oh, no, my golf buddy told me that as long as I took it out once I was 59, I was fine. I was 59 and a half. So talking to his golf buddy instead of calling me cost him $5,000. He was really apologetic. You don't have to apologize to me. It's your money. I felt really bad. Part of the reason we started the blogs and started doing these things is so people would know. Smart business owners keep good records. One of the fallacies I've seen constantly through my career is if I don't have great records, so, I can take some of the money and pocket it, and since I don't have good records, it's going to be hard to catch. Yeah, kind of true, though you'd be surprised. IRS has ways of recreating your records. But my experience has been, if they had just done their bookkeeping correctly, recorded all their income, the amount of expenses they're missing offset that almost every time, if not more than offset it. So smart taxpayers, smart business owners keep good records. Plus, without good records, I can't do tax planning. So you're stuck with history. Smart business owners do their taxes early. They don't wait till August, September. They don't come in 2 days before a deadline. They come in when we're fresh, when we're thinking, when we have time. All right. And the truth of the matter is, I've sat down and analyzed my mistakes. Almost 90% of mistakes, what I call mistakes, and not all of them are mistakes. I call a mistake something we should have known better and should have called the client and asked a question. That too is a mistake, is in my mind. We got the experience. We're the ones that know what we should ask. All right. Almost all of those happened. I think it was like 85.7% or something like that happened 5 days before the deadline. So it's pretty simple. We stop doing hard things 5 days before the deadline. We're going to extend it. And if it's near the extension deadline, guess what? You're going to be late. All right. Smart business owners save for their taxes as they earn their income. This is the biggest thing. If you know you're going to pay $30,000 to $40,000 during the year, there's no good reason to wait until June to look for the cash. You have all year. My experience is and this is part of tax planning, if I tell them they're going to owe $30,000 and they have till March 15th, April 5th, March 15th, April 15th, or even September 15th, October 15th, if they have an extension, almost every business owner can figure out a way to get it. All right. But if I tell them they don't do tax planning, they don't do anything, they drop the stuff off on April 1st and I get it done by April 10th and I call them up and say, you owe $80,000 in 4 days or there's penalties, they're not going to be able to get that. Very few of them can. Now, that's part of the reason why if they're a business owner, I almost don't take them unless I'm going to do tax planning with them if they're making money. All right. At a bare minimum, I'm telling them, I got a story on that one too. I got lots of stories because I've been doing this so long, like I told you at the beginning. I had a gentleman, I called him up in December twice, sent him an email, sent him a letter, said, hey, looks like you had a good year. We should do some tax planning. Finally, he calls me back and says, no, we're good, it was $80,000 when I do the return in September, because he finally brought it to me at the beginning of September for a September 15th extension deadline. And it's, and I'm pulling out the emails and the letters going, I tried. It's like that old joke about the guy that dies in a flood. God sent him rowboat, a motorboat, and a helicopter, and he was waiting for a miracle. And God's like, "Oh, what do you want me to do?" And that's kind of where I was at. I was like, "Hell, I could have saved you money." He came back after that. We basically saved him money every year. He comes back every year, so there's no doubt about it. Anyways, smart business owners take tax planning seriously. Smart business owners have good tax records. Smart business owners start early. Smart business owners save as they go for their taxes. Be a smart business owner. Don't be surprised by your tax bill. Hey, until next time, this is Wayne Blau saying, let's make this our most profitable year ever. Thank you very much.